Hi, hello everyone. Welcome back to my channel. In this video, I'll be solving problems on valuation of supply, which is related with a determination of the transaction value and ascertainment of GST payable. Kindly watch the video till the end, like it and share. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. This is an example of computation of imported value of goods. The question is X company limited. Let me stretch this one here. X company limited imported goods from America from the following information. Determine assessable value, total tax payable, total cost of imported goods. The details are cost of goods is $15,000. Packing charges $3,000. Then freight from America to India is $3,000. Insurance premium $2,000. Commission paid in India to the broker of exporter rupees 20,000. Basic customs duty is at 10%. IGST at 18%. Education cess at 3%. Applicable landing charges is at 1% of CIF value. Exchange rate notified by CBEC is rupees 70 per US dollar. So from these details now we are required to find out the assessable value, then the total cost of imported goods. Okay. Computation of, this is solution, let us take here very simple one here. Computation of assessable value and imported value of goods. Let me insert the column here. So particulars rupees. So now we should go on. So the cost of goods is given, packing is to be added, freight is to be added, insurance is to be added, commission is to be added, basic customs duty we should calculate at the 10% of CIF value, that is assessable value here. CIF value. So now let us go for finding out here. cost of goods, so it is in dollars, we should convert in terms of rupee. So $15,000 multiplied by rupees 70, which equals to 10,50,000. Then to this we should add here packing cost, and we should go on adding here packing charges. So it is $3,000 multiplied by rupees 70, which comes to rupees 2,10,000 here. So 2,10,000. The sum of this will be, it is a free on board value or free on board, which comes to rupees 12,60,000. To this we should add freight. So $3,000 multiplied by rupees 70, which comes to rupees 2,10,000. Then similarly we should add insurance. So insurance here, it is $2,000 multiplied by rupees 70, so which comes to rupees 1,40,000. So 1,40,000. Then to this we should add commission here. Commission, it is given in Indian currency, so directly we should take it as 20,000. So the sum will be now 16,30,000. To this we should add here so to this we should add landing charges. So landing charges, which is given as 1% of rupees 16. Landing charges is given as rupees, it is 1%. So landing charges 1% of rupees 16,30,000, which comes to 16,300. So the sum of this will be CIF value, which will be 16,46,300. Then to this we should add basic customs duty, which is given as 10% of CIF value, that is rupees 16,46,300, which equals to rupees 1,64,630. Then education cess, so this education cess will be on this BCD, so 3% of rupees 1,64,630, so which comes to rupees 4,939. So when, let me underline here, So the sum of this will be comes to so 1,64,630 plus 4939, which comes to 1,69,569. So when the sum of this will be taken as assessable value, so 1,69,569 plus 16,46,300, which comes to 18,15,869. So to this now we should add CGST. And it is not CGST, IGST, sorry, IGST, because it is imported goods here. So IGST at the rate of 18% of rupees 18,15,869, which comes to rupees 3,26,856.42. when we do the approximation, so approximated value will be 3,26,856. 3,26,856. When we take the sum of this will be, this is total cost of imported goods, which comes to rupees 21,42,715. So now we need to find out how much is the total tax payable. So computation of total tax payable. So let me insert columns here. So particulars rupees. So basic customs duty, which we have computed as 1,64,630. Then education cess, which is given as rupees, which we have computed here as 4,939. Then IGST, which we have calculated here as rupees 3,26,856. So the total tax payable will be rupees of 4,96,425. This is how we need to calculate here. Let me make this board here. So why the BCD is payable? Because it is imported here, so that's why the BCD is payable. Let me only make the board here. So this is free on board, then this is CIF value, then assessable value, so which can be distinctively shown here. So this is how we need to calculate the imported value of goods. Thank you. This is an example of determination of transactional value and GST payable. The question is, Arunodaya, let me stretch this one here, Private Limited has provided the following particulars relating to sales during the month of March 2020. Compute transactional value as per section 15 of CGST Act 2017 and GST Payable. Selling price including IGST of rupees 7,200, rupees 67,200. Following transactions not included in the selling price: normal secondary packing rupees 2,400, cost of a special packing rupees 1,700, cost of durable and returnable packing rupees 1,300, trade discount rupees 3,000, discount provided before the supply of goods and the same is shown in invoice. Freight charges paid by supplier charged separately rupees 800, and insurance on freight rupees 400. So from these details now we are required to find out the transaction value here. Very simple problem. Determination of a transaction value of for Arunodaya Private Limited. So let me insert 3 columns here. So particulars rupees. So now let's begin here. So selling price, so in the bracket rupees 67,200 minus rupees 7,200, which comes to rupees 60,000 here. So to this we should add inclusions. So inclusions to be made here are normal secondary packing. Then we should add cost of a special packing. Then we should add freight charges. Then we should add insurance. So cost of normal secondary packing is 2,400 plus 1,700 plus 800 plus 400. So let me underline here. So the sum of this comes to, so the sum of this will be 2400 plus 1000, 4100. So 4100 plus 800, 4900. So total 5300. 5300. Let me take it to the outer column here. 5300. The sum of this will be 65,300. So now from this we should subtract the exclusions here. Less exclusions, that is, we should deduct the trade discount here. Trade discount, so that has comes to rupees, trade discount is allowed 3000 here. So 3000. The difference here is a transactional value, which comes to rupees 62,300. Then we should compute the GST payable here. So computation of GST payable. So CGST equals to, so the rate of GST is 12% here. So 6% of rupees 62,300 of rupees 62,300, which equals to rupees, it comes to 3,738. Then SGST equals to 6% of rupees 62,300, which equals to rupees 3,738. So total GST payable equals to rupees 3,738 plus 3,738, that comes to 7,476 rupees. So this is the total GST which is payable on a transactional value. So here this we need to calculate like this only. So thank you.